Are regional banks still grappling with the aftermath of the 2023 crisis? The recent Q4 results might suggest so. If we take a closer look, we'll see that Fifth Third Bancorp's net interest income didn't quite hit the mark, falling short of Wall Street's expectations. But it's not all gloom and doom. The bank did manage to grow its average deposits to a whopping $169.5 billion. On the other hand, KeyCorp and Discover Financial didn't fare as well. Profits took a nosedive, with Discover experiencing a staggering 62% year-over-year decline, and KeyCorp not far behind with a 36% drop. These figures are concerning, to say the least. The mixed Q4 results from these regional banks suggest a continued struggle in their recovery from the 2023 crisis. It's a challenging landscape where some banks are showing signs of resilience, while others are still trying to find their footing. As we can see, the regional banks' Q4 results paint a picture of instability and uncertainty, casting a shadow over their performance in 2024. Now let's delve deeper into the earnings reports of these regional banks. Fifth Third's net interest income, for instance, came in at an impressive $1.42 billion, and their average deposits reached an all-time high of $169.5 billion. Despite these promising figures, it wasn't all sunshine and roses. Discover and KeyCorp, two notable players in the regional banking scene, saw significant declines in their profits. Discover's earnings fell by a whopping 62% year-over-year, while KeyCorp's profits took a 36% hit. Now let's shift our focus to the Federal Reserve. Future rate cuts could have a significant impact on these regional banks. A rate cut could potentially be a bullish sign for these banks, injecting them with much-needed momentum. However, as we've seen in the roller coaster ride of earnings this season, nothing is certain. Despite the mixed bag of results, it's too soon to declare the regional banks out of the woods just yet. So what does the future hold for regional banks? As we look ahead, there are signs that the pressure on deposit costs is beginning to alleviate. This, coupled with controlled expenses, suggests that these banks are regaining some stability. However, the future is not just about numbers, it's also about sentiment. The comfort level of customers with regional banks will play an integral role in shaping their future. This is because customer sentiment directly influences the deposit profile of these banks. In terms of market trends, the timing of potential rate cuts from the Federal Reserve is a critical factor to watch. If the Fed does cut rates, it could be a bullish sign for regional banks. But let's not forget, the regional banking sector took a hit on sentiment last year, which put pressure on deposits. Today, we're seeing signs of recovery, but this is a closely watched indicator by investors. While regional banks are starting to regain momentum, it's too early to declare they are out of the woods. The profit drops experienced by Discover Financial and KeyCorp are reminders of the challenges that still exist. Given these factors, it's clear that the regional banks have a challenging path ahead in 2024. However, with strategic management and positive market trends, there are still opportunities for growth and recovery. Make sure to follow G's Finance for your daily finance news.